A biotech pop and Obamacare back in the news. It's headline deja vu on your market checkup. Hi fools, I'm Max Macaluso, and joining me today are David Williamson, healthcare analyst here, and our Director of Investment Planning, Dan Kaplinger. So guys, let's start with the biotech pop. And David, this is Discovery Labs. It's up almost 40% today on an FDA decision that's not an approval or rejection.
Correct, Max. So its key drug is surfaxin, and this helps prevent a potentially fatal breathing condition in infants. And surfaxin actually has a troubled history with the FDA. It was rejected 4 times. So I guess the lesson is if you don't succeed at first, try, and try again. It was finally approved on its 5th time, but it wasn't allowed to sell the drug yet. It had to get FDA agreement on updated product specifications. It has that now. So Discovery Labs is saying that it will be on the market before the end of the year, sometime in the 4th quarter. However, once the drug gets on the market, it's going to face some pretty tough competition, Max. It's a synthetic versus an animal-derived product, but there are competitors out there who do the same thing. AbbVie has Survanta, Cornerstone has Curosurf. Now, Discovery itself said sales of surfaxin will be between 50 and 75 million. So after today's pop, I wouldn't really jump on the Discovery Labs bandwagon. I think a lot of those sales are priced in, and it's going to take a little while to reach that sale point too.
Okay, so investors should be a little cautious, not be too bullish about this pop today. But David, are there any clear catalysts ahead?
For Discovery Labs beyond this? No, this is really the only drug in their pipeline, Max. This is what investors have been waiting for. That's why it's up 40% today. But I think it's just it's great that they've been trying since 2004 to get this drug approved and on the market. So, it's finally here. It's a great day for Discovery investors, but it's probably not a good time to jump on the bandwagon if you weren't already a Discovery investor. Okay,
let's shift the discussion over to Obamacare, which has been in the news for the last few months, really, but this week was the rollout of the exchanges, the marketplaces where people can find insurance coverage. So Dan, what worked this week?
Well, basically it was a good week for Obamacare proponents because we saw really unexpectedly large popularity in terms of people going to those exchange websites. It really overwhelmed what a lot of people were expecting, really calmed any fears, and put down opponents' arguments about the possibility that they'd open up Obamacare and nobody would show up. Anything but happened, and so that was really good news for proponents of the plan.
I looked at the numbers, and the federal government said on their healthcare.gov site they had 4.7 million unique visitors and 200,000 calls to their call centers. Now, California and New York just measured visits, not unique visitors, but California said they had 5 million visits, New York 7.5 million. So, like you said, clearly the demand is there.
And also premiums came in lower than projected, which of course is positive news. David, what didn't work?
Well, Max, there were glitches. The sites really couldn't handle all this demand and traffic. Now, there were some concerns ahead of time that it wouldn't correctly match up subsidies available for people and calculate the right premiums. But definitely traffic was more than anticipated. I believe, Dan, you were saying that they were trying to get more servers online to handle the amount of traffic. There was an interesting article about Xerox working with the Nevada exchange. They're working with several other exchanges, and they've basically been working around the clock to try to keep the thing up and running. But they are going to optimize it over time, figure out when most people are getting on, when they're calling in, and try to smooth out the process overall.
Right, and Dan, actually, you were talking about the huge spike in traffic that we saw on a lot of these exchanges, but what about actual applications? Are people actually signing up for coverage right now?
No, I mean, one of the problems that you saw with all the difficulty in getting through to the website, servers breaking down, that kind of thing, is that you got a lot of those people, they had interest in the program at first, but then they met these obstacles in actually trying to put their names in, put their basic information in, and so you didn't really see as many completed applications as you would have liked to see. That said, it's early in the open enrollment process. People have several months before they have to actually file an application in order to be eligible to get their insurance coverage on January 1st. And so, you know, since it's such a complicated program with so many plan options in many states, it's not surprising that a lot of people weren't ready to get an application in, even if they had been able to with the technological limitations going on.
So do you think the hype around all these glitches is a little extreme right now?
Well, yes, but it's the same sort of hype that we've seen in the past with situations like this. I mean, when you think back to when Medicare Part D first became available, prescription drug plan, there was the same kind of concern about, you know, is the federal government going to be able to get the infrastructure in place to meet the demand that they knew was going to happen for Plan D? And so when, you know, those inevitable problems came up.
And it was a mess at first.
It was, yeah.
But it's proven to be a very popular program.
Indeed, yes. And they've gotten those glitches fixed, and now it's a very smooth program. And so, you know, I think if you give Obamacare the chance to, you know, kind of get through these initial problems, that by the time people are really having to make that final decision in order to get the coverage that they want, the system's going to be a lot smoother than it was this week for sure.
Right, and Dan, since you're our Director of Investment Planning, let's dig a layer deeper and look at what the next step is now for consumers. What's up ahead after this first week?
Well, a lot of consumers this week were really just trying to get the basic information that they needed in order to evaluate what options they had under Obamacare. You know, remember, we've seen a lot of information that's based on assumptions and averages and things that are based on like an entire state's population. People didn't always understand, even though people tried to give examples that would fit, they didn't know what the actual impact on them was going to be. And so you're really seeing people take a look, try to figure out, you know, what plans are available, how good of a coverage should I consider getting, how much am I going to have to pay for that coverage, and, you know, really considering the choices between the bronze and the silver, the gold and the platinum plans, trying to figure out exactly what's going to happen going forward with their premiums, trying to make a smart decision, because the decision they're going to make this open enrollment period is something they're going to have to live with throughout 2014 until the next open enrollment comes for the following year.
Right, and shifting over from consumers to businesses, David, what's next for businesses
Well,
here?
I think the real tie-in is actually what you were talking about. It's plan choice to some degree. I think people really shop on price, and it'll be interesting to see over time whether people can more accurately judge their healthcare spending. But the larger out-of-pocket expenses may limit a lot of elective procedures, and so that could really maybe not up utilization as much as some people are expecting. But you know, when we talk about businesses, Max, there's two types, really two ways to look at it. It's if you're an employer, if you're a small business employer, and you're looking to give your employees health insurance, those exchanges go online in a month. They might be buggy at first as well. Also, small businesses can enroll in any time. There's no open enrollment period like there is on the other exchanges. Large employers don't have to give insurance for a whole nother year. But if we're talking about businesses downstream, you know, all the demand, and I got to be honest with you, Dan, I was surprised. I thought it would prove to be popular, but to see all that pent-up demand at first, you know, we're creatures of habit, right? And so if you're not, and deadlines, and if you're not going to get insurance until January 1, I didn't expect anyone to sign up until December, really.
But David, do you think that was because, you know, people were confused about the program, kind of confused about what the exchanges actually were?
Yeah, it's possible that people thought if they signed up today, they got insurance today. I mean, I think there's still a lot of education left to do, but I do think that amount of aggressive early demand might validate WellPoint's strategy, and they wanted to have the largest footprint of all the insurers on the exchanges. You saw a lot of caution out of the other big insurers. WellPoint just, you know, dove in head first, and they thought they really could grab a large portion of the pool and really diversify risk, and it wouldn't just be the oldest and sickest patients or customers who were previously denied insurance, that they could get some younger, healthier people as well. You know, I can't wait to see the data, but it's going to be really interesting if WellPoint's strategy is validated, because they might be able to get a legitimate lead on some of their competitors as far as enrolling. And I think hospital stocks as well. You know, they'll benefit from long-term tailwinds of people getting insurance. The earlier people sign up and get covered, the better that is for them as well. But, you know, again, when it comes to elective procedures, I'm a little interested to see sort of how much, what plans people choose is actually impacting that growth.
Okay, Dan, do you have any thoughts on what's next for insurers here? I mean, like David said, WellPoint seems to possibly be on the way to validating their strategy of aggressively going after some of these exchanges. But other insurers like United Health have been a little timid.
Yeah, I mean, I think that that's going to be, what we're going to need to see going forward is how many people actually do finish the application process. Because I think basically what you've seen is WellPoint's making the gamble that people are going to follow through and get the coverage. And some of the other insurers like United Health, like Aetna and Cigna, they've kind of backed away from the healthcare exchanges. They've been looking instead to kind of try to get people outside of the Obamacare context. And so the question becomes, once people have a taste of Obamacare and what it's going to offer, are they going to stick with that, or are they going to look for alternatives? And I think the answer to that question is going to determine in large part whether WellPoint carries the day or whether you see its competitors end up doing better.
And it tends to be a very risk-averse industry, so I don't think people who are investing in, Aetna and Cigna and United Health really will criticize the company's management for being conservative when it comes to these publicly traded exchanges. That's why it's sort of interesting that WellPoint has taken a more aggressive tone, to me.
I guess the only other thing that I'd have to say is that it's really interesting to see from a consumer standpoint. I have to wonder, some of the demand for Obamacare may be actually driven by fear of the Obamacare penalties that are coming out, because there's a lot of misunderstanding, a lot of confusion about how big those penalties are going to be. With penalties starting next year, $95 or 1% of income above your filing limit, which is whichever one is the greater one. I think that a lot of the demand is kind of driven by that. Oh boy, if I don't do something, it's going to hit me in the pocket, and that may be one reason why people are getting it done now instead of following their usual procrastination, like Dave was talking about. And taking a look at it. And
it's funny too, because I saw a list of questions about Obamacare, and one of them was, will I go to jail if I don't sign up for insurance? So I think people they just know that there's this nebulous penalty out there, and it's not that much, especially $95 versus a bronze plan is going to be about $250, a silver plan low 300s. So and you get something for that, but it'll be interesting. Those penalties do ramp up, though, over the next couple of years.
So obviously, still a lot of education that needs to be done here, but positive signs, a few problems. But guys, let's close out the show with a discussion of a stock you're watching that could benefit from the Affordable Care Act. Let's start with you, Dan.
Sure thing, Max. I'm taking a look at Medtronic, and it's sort of a speculative idea at this point, but it's based somewhat on what's happening with the government shutdown. What we're seeing lately is that there's an impasse in Washington, and we're trying to figure out, lawmakers are going to be trying to figure out how to break that. And I think that one bargaining point on Obamacare, which has really attracted more attention than I think many people believed it would, is that if you can use the medical device tax, the excise tax of 2.3% that Medtronic and its medical device maker peers are having to pay, as sort of a bargaining chip, that it may give the the parties that are working on Capitol Hill trying to resolve things something to discuss in terms of potentially repealing that. I think the odds aren't necessarily all that good, but it's something to keep in mind, and combined with Medtronic's already strong business is something that could really be a catalyst going forward.
Right, so you think Medtronic is pretty solid. The speculation over the excise tax could be another tailwind for it, but that remains to be seen. Excellent pick.
And I do think there would be some bipartisan support for repealing that too, because there are a lot of medical device makers in both Democrat and Republican districts.
That's right, yeah.
All right, so keep that one on your watch list. David, what's on your radar right now?
Well, I'm going to move a little downstream, Max, because I think everyone's focused on how the Affordable Care Act is going to impact a lot of pure play healthcare stocks. But I'm going to move to the pseudo-retailer space and look at the pharmacy stock Walgreens, which is going to just get a huge boost thanks to the Affordable Care Act. There's going to be about 15 million, according to Congressional Budget Office estimates, newly insured people in 2014, and that's really going to boost prescription spending, because if they're insured, they're not going to just fill a prescription, decide it costs too much, and walk away. We saw that with the obesity drug makers. Remember, Vivus was having decent prescription numbers to start off with, but the abandonment rate was huge because people were paying out of pocket. That's why getting insurance coverage was so important. Now that people are covered, there won't be these abandonment issues. Walgreens has 20% of the market share, so it's got a pretty dominant position. Another change they're making to deal with this larger insured population is a healthcare clinic that's going to, and they're trying to push into more chronic conditions than just acute care as well. And it's going to be a new way of treating people who don't necessarily have primary care physicians, but they are insured. Their competitors are doing this as well. CVS's Minute Clinic. I like CVS too. I just chose Walgreens to talk about, so we're going to focus on that. But I really think they're taking a smart approach, and I think that's going to be a new way how healthcare is delivered with these essentially nurses instead of doctors treating people. They've made some savvy business deals as well. They have a 45% stake right now in Alliance Boots, which is a European company. They have an option to buy the remaining 55% in 2015. It's going to be a $6.7 billion deal in total. They would become, though, and this is about scale, the largest buyer of prescription drugs and medical products in the world. There's potentially $1 billion in synergies per year due to this deal. They also have a stake in AmerisourceBergen, which is just another link in the value chain. It adds vertical. It's like vertical integration. And we take a look at CVS. They're increasing profits thanks to the patent cliff. Generic drugs have better margins for them.
That's also helped Rite Aid.
Yeah, it's helped Rite Aid a lot. It's helped Express Scripts a lot. And they're actually moving into a mail order business, which would compete with Express Scripts. And so, profits surged last quarter. It's a stock that I don't think is done surprising the street. It's not a stock I would necessarily call cheap, but I think you're paying a very fair price for a company that's got a lot of tailwinds behind it, and it's got good growth potential. And it's just a very solid stock and a dependable stock.
And I think that you really can't underestimate just the transformative potential that having those local clinics could have, because it really does have the ability, especially for people for whom getting that healthcare is not nearly as convenient as it is to go to a corner Walgreens store and get just the immediate assistance that they need. It can really change the way people do and give more people more excuses to go to Walgreens for more things.
And then shop, the convenience store side of Walgreens as well. Purchase their generic drugs there. It's just Walgreens is doing a good job, I think, creating sort of this vertical integration model on the value chain. And you look at, it's not just going to be about the exchanges, but I think the Medicaid expansion will be huge, because I think it's going to be more of a lower income population that uses these minute clinics like CVS is doing, or Walgreens Clinic.
Okay, well, that does it for our market checkup today. We'll continue covering Obamacare in the healthcare space, and if you have more questions, you can read Dan Kaplinger's SFR, Everything You Need to Know About Obamacare. Once again, for David Williamson and Dan Kaplinger, I'm Max Macaluso. Fool on.